Hey guys, Scott here, and I just wanted to talk a little bit about what we saw take place yesterday with the federal benchmark rate hike. You've probably seen the news, and they are predicting the sky is going to fall, and I would say that that's probably not going to happen. Um, let's talk a little bit about what took place yesterday, why it took place, and then a little bit about what I think is going to happen with mortgage rates. Now, bear in mind, I'm just a mortgage lender. I read the same things you do. I have access to the same information that you do. Uh, but I've been doing this now for 20 some years, and this isn't the first time we've seen inflation. It's not the last time. It's not the first time we've seen a recession. It certainly won't be the last one. In fact, most of you probably remember that the worst recession that took place happened just back in 2008. That's when the housing market bubble burst, but we talked about that too. We probably aren't going to see the housing crash like we did before because of the supply and the demand, basic economic rules. So yesterday, the largest rate hike took place since 1994, and that was big. And the reason they did it was to help. Their hope was to slow down inflation by increasing the cost of money. Now, why would they do that? How is that going to affect inflation? First, you should probably know what the definition of inflation is. And when I take a look at investopedia.com, they say that inflation is the rate of which the value of currency is falling, and consequently, the general level of prices for goods and services is rising. So the value of your money goes down in an inflationary period, and the cost of things go up. What we're doing here by the rate hike is to increase the cost of money by slowing that decrease of value in your money and stopping the increase of the item. So they're basically increasing the cost of money in order to slow down the cost of inflation and also the decrease in the value of your money. So we've got that. Now, what are they hoping to accomplish by doing this? Well, believe it or not, they're hoping to start a recessionary period of time. Now, what is a recession? That's another one of those economic terms. Let's see what Investopedia says about that. A recession is a period of declining economic performance across an entire economy that lasts for several months. Um, so they're hoping that by increasing the cost of money, slowing down the cost of goods and services, and also they're going to um, slow things down so that things can get back on pace again. So basically, they're doing a reboot. How is this going to affect your mortgage rates? If you were watching the television yesterday and saw the news, they were telling us that interest rates were going up, mortgage rates would go up, credit card rates were going to go up. Just yeah, not good things, at least in our mind. Well, yes and no. Okay, that is probably true. Some of these things are going to happen, and we're going to see increases in interest costs. But for the mortgage industry, um, we don't always. It doesn't always. This federal benchmark rate affects us really indirectly. Our rates are based on mortgage-backed securities, which are bonds. So that's half of the stock and bond market. Now, why do you buy bonds? Because it's a more conservative purchase. Why do you buy stocks? Because you're going to make more money. It's a more aggressive investment. So really, I would not say that we're necessarily going to see rates going up. I think rates have probably gone to the point where they're not going to go much higher. In fact, yesterday after the increase was announced, the market improved and we saw gains in the mortgage-backed security. So I would say relax. I don't think that we're going to see these humongous rate increases that they're talking about. Um, Historically, we're not even in the worst rate period that we've been. Look back at 1981. I posted a graph a little while ago. Rates were significantly higher, and I can still remember calling people and quoting them 10% and saying, "Hey, you got to get in now." So it's not the worst that we've seen. I think that this is something that we're all going to recover from, and as long as we keep our heads and don't do anything crazy, I think we'll all get through it. That's all I've got to say. I hope that you have some comments. Go ahead and put them down below. I'd be happy to answer any questions you might have as best I can. And if you or someone you know is looking to purchase a home or refinance a home, have them give me a call. I'd be happy to help them with that too. Take care of yourself. Have a great afternoon, and we'll talk to you next time.